Hey everyone, Alibaba stock has been one of the worst performing stocks on my list of top stocks to buy in 2024. In this video, I'll go through Alibaba again. I'll highlight where I think the stock price could end up by the end of the year and give you a more broader outlook on what's going on with Alibaba stock, why it's down so much, and the factors that could lead the stock price to increase by the end of the year. So let's jump right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so one of the things I'm going to need to make my stock price prediction for Alibaba stock is its current share price. You can see it's been a volatile year. Right now, it's trading at $74 per share. It's down from around $77 per share to start the year, which is an underperformance considering most of my 25 stocks to buy, the top stocks to buy list is up meaningfully on the year, while Alibaba stock is down year to date so far. One of the reasons for this is the macroeconomy in China, much worse than expected, both in 2023 and so far year to date in 2024. The economy there not recovering the way I thought and many analysts thought it would following the reopening from COVID. Additionally, significant changes in consumer behavior have hurt companies like Alibaba Group as people around the world have spent more of their time and money spending away from home, traveling, going to theme parks, going on cruises and things of that nature, which hurts the Chinese economy for the most part because they rely so significantly on the export of manufactured goods that when people are spending more money on services, that really hurts the Chinese economy. And then on top of that, the geopolitical pressures between the US and China and the Europe and China and trying to de-emphasize the supply chain in China. Many businesses are trying to diversify their supply chains, getting out, at least not completely from China, but diversifying away from China because of the increasing geopolitical tension. They don't want to have so much of their supply chain in that region. And so all of that has been hurting the Chinese economy, which has hurt companies like Alibaba, their earnings per share and their revenue. And Alibaba specifically, on top of the macroeconomic concerns, has had difficulty growing revenue. It's been losing market share to rivals in the region. And so it's been a lot of tension here for Alibaba, and it's reflected in its valuation, which is the next thing I'm going to need. Alibaba right now is trading at a forward price to earnings of 7.269. This is the cheapest this stock has been in many, many years. And it reflects all of those headwinds I just talked about earlier. All those factors have Alibaba stock trading at a really, really cheap valuation, 7.629. This is trading at a valuation like a large telecom stock or one of the slow growth car manufacturers, right? Alibaba Group right now is trading at a valuation similar to that of AT&T and Verizon and Ford and GM in the mid single digits, right? And these are companies that never have traded at premium valuations, while Alibaba stock, you can see just a couple of years ago in 2021 it was trading at a forward PE of 30 and over 30. And in general, companies like Alibaba, if you compare it with Amazon, Amazon's trading at a forward PE above 30. If you compare it with other e-commerce retailers, international, not US based, like Mercado Libre, they're trading at higher valuations, even C Limited trading at a higher valuation. So Alibaba, by all metrics, is trading at a discount to its peers, whether locally or internationally, and it reflects those headwinds I mentioned earlier. The depressed valuation incorporates those headwinds that Alibaba is facing. So analysts on Wall Street have become more and more pessimistic on Alibaba stock. Right now, they estimate that its earnings per share in 2025 will come in at $8.70. That will be almost the same as in 2024, where they expect $8.71. And you'll notice both for 2024 and for 2025, the analysts that are following Alibaba stock have downgraded their earnings per share expectations. 90 days ago, For 2024, they were expecting $9.21 in earnings per share, and they now expect $8.71 in earnings per share for Alibaba. For 2025, investors were expecting, or analysts that were following Alibaba stock were expecting $9.90 earnings per share, and that's been moving steadily downward in the last 30 days and 60 days and 90 days, all the way down to $8.70 per share. So earnings per share outlook decreasing continuously as the economy, as Alibaba business is coming in worse than expected so far in 2024. So now that we have the numbers, we can go ahead and make the stock price prediction for 2024. So the earnings per share for 2025, as we just saw on Yahoo Finance, was $8.70. And if we apply the forward PE of 7.6, then the stock price could reach $66 per share in 2024. Now, if you're paying attention, you'll notice that the stock price right now is at $74 per share. So if all else remains the same, Alibaba's stock price is expected to decrease on the year. That scenario I don't think is the most likely. I think its forward price to earnings will increase as the year progresses. I think it could increase to 9, 12, or 14 at a forward PE, 14 being the least likely. But if the forward PE rises to 9, then the stock price could increase slightly to $78 per share. If the forward PE increases to 12, then the stock price could rise to $104 per share. And if the forward PE rises to 14, then the stock price could rise to $121 per share. So out of these four scenarios, 3 out of the 4 have Alibaba stock price rising, and 1 out of the 4 has Alibaba stock price falling. I think the forward PE multiple will rise as the year progresses. One of the factors I think that will cause that is a normalization of consumer behavior. I think this will be the final year where consumers unleash this pent-up demand for away from home experience. I think this is the final year where people will spend more than usual on away from home things like travel and entertainment and restaurants and bars and all of that. One of the reasons for that is the prices for those services have absolutely soared, and people, comparatively speaking, relatively speaking, the price to experience something away from home versus something at home is so much different, and it's so much more expensive away from home. And that built up savings that people had from the COVID stimulus worldwide, especially in the United States, that's dwindling, that's going away. And so they're not going to have that spending power to go ahead and splurge on those away from home experiences. So those two factors, the return, the normalization of consumer behavior, will shift their spending more towards goods away from services, and that'll benefit the Chinese economy, and that'll benefit companies like Alibaba, which I think will lift up the forward PE multiple for Alibaba. How much will it increase? Well, in my opinion, I think the forward PE multiple ends up around between 9 and 12 to end the year, and I think the stock price ends up somewhere between $85 per share and $90 per share. Between $85 and $90 per share. That would be up from its $74 per share it's currently trading at. So that would be a solid increase from where it is today. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.